Hey folks, Colin Richards here. I'm Denver's biblical investment advisor, and today we're going to be talking about Trump taxes and you here on the Lord and Richards Show. We'd love to chat with you about this very timely topic. Give us a call at 720-372-0400. Again, that's 720-372-0400. And for the curious among you, you can read more about us and learn more about our firm and what we do for retirees throughout the Front Range at lordandrichards.com. And one last time, here's the phone number, 720-372-0400. Again, this is Colin Richards, and today we're reaching out on this very timely topic of taxes. As you know, we're seeing a tremendous push through Congress right now to try to get a tax reform bill through. And there have been so many different comments made both during the Trump campaign and during the various congressional campaigns and from individuals on both the right and the left about what taxes we should expect and what type of reform we should expect in the days ahead. Here's where we are. If the Republicans, who are dominant in both houses, if they want to get this through, we're going to need 50 votes in the Senate and the vice president in order to break a tie. But what is the impact if their final bill, however that looks, goes through? Well, it's going to be a 10-year period. It's only a 10-year adjustment to the tax code, a 10-year repeal. And then we're back to the drawing board, and it'll be up to the Congress and the administration at that time to decide what the fate of these tax changes are. So bear that in mind, because here's the overarching message. No matter what you're hearing from the talking heads or in the press right now, we're really only talking about a window of time, and it's very hard to predict beyond that. So what should we be doing? We should continue planning for financial independence. We should continue planning and using the vehicles and using the strategies that we've come to appreciate that will help us keep taxes low, both before, during, and after retirement. Before, while you're working. During retirement, in those years when you can least afford to pay extra taxes because your income is coming from usually a more constrained group of sources, such as pensions, Social Security, and your 401k. And then, of course, at the end of life, making sure that we don't have all of our money drained down the gutter into the government tax coffers. And here at Lord & Richards, our gifted team of advisors spends time with folks every single day, just like you, whether you're working, whether you're retired. We spend time every single day trying to maximize your income during retirement. We call it financial independence, and reduce taxes during that same period and beyond. So we're going to talk today about what is currently on the table. It's bound to change, but we've got a few non-negotiables that we've gotten from the administration. And then we're going to talk about what you can be doing about it. So again, if you're just tuning in, this is Colin Richards. We're talking about Trump, taxes, and you here on the Lord and Richards Show. And we'd love to talk about your specific situation because, you know, talking about taxes in a vacuum isn't helpful. It's when we apply it to our own personal retirement planning. So we'd love to chat with you about your specific situation, and we're available right now to visit with you at 720-372-0400. Again, write this down, 720-372-0400. So what are those non-negotiable principles? Well, from the various Trump tax proposals, here's what we've gleaned. First of all, he wants a competitive corporate taxation scheme. Most Americans realize that our corporate tax rate is very high. Now, if you're kind of short-sighted in your view, the old view is, well, great, stick it to the big corporations, hit them hard. And then suddenly you start to think about that and realize, oh, wait a minute, these are the guys that are going to hire us and employ us so we can become financially independent. So if we kill our corporations and we kill the job market, that's going to come back to haunt us. So I think most sensible people would love to provide some relief in our corporate tax scheme to free up dollars for growth and expansion. You know what growth and expansion means? It means hiring. And that's what we want. And it means opportunities for advancement. Okay? So the first non-negotiable principle that has been laid down is a competitive corporate tax rate. That may or may not affect you personally, whether you own a business, but it will eventually affect you in how you're employed, what kind of advancement opportunities you have, and whether or not the market will allow us to employ everybody that is looking for a job. The second is to try to get some of those overseas earnings with our large multinational companies back over here into the United States. I don't know if you realize this, but because of the complexity of our tax code and the onerous nature of the tax rate on corporations, many corporations put a lot of earnings overseas. You know, they'll open offices, they'll do whatever they have to do in order to move those earnings into other countries that have a more favorable tax rate. Now, we can argue the patriotism of that, but here's the bottom line. A corporation answers to its shareholders, and they're expected to use all means that are legal and ethical to achieve the strongest possible profit and the strongest possible income for that corporation after taxes. And so expect to see in these proposals a desire to, hey, let's make this more attractive so these companies say, okay, yeah, sure, we'll put our earnings here, we'll let them be taxed here because the system is fair. Now, here's where it gets down to us a little bit more personally. Okay, moving off of the business, the non-negotiables are to simplify the tax code. And this could be fun because the goal is to get a lot of people to be able to file on one page. I don't know about you. You may be able to use 1040EZ and get it all down on one page. But there are a number of people who, through deductions and through exemptions that they're trying to claim, need to take extensive volumes of paper on their tax return to explain that and to justify those deductions. And so simplifying the tax code so it's very easy to write down your income, to write down what is taxable and get that onto one page for a large group of filers is one of the goals. That's great. And then another one is a middle class tax cut. So everybody likes to define who the middle class is. And, if you're working in a minimum wage job, you consider yourself the middle class. And everybody else out there who may make more is in, they're the rich, they're the wealthy. So getting this defined is going to be interesting, and getting all the talking heads out of the way and just having a clear path to getting the most people the benefits that they need as well as the tax cuts they need without bankrupting our government. You and I both know that over the years we have become a debtor state and a debtor nation. And one of the problems with tax reform is that you can't please enough people because you take away their deductions, so you end up with a lopsided reform that still leaves us growing our deficits. That's my problem with that. That's my long-term concern, and it's something we should all be concerned about. If you're just jumping on, this is Colin Richards. I'm Denver's Biblical Investment Advisor, and I would love to have a conversation with you about how you can achieve financial independence. Here on this show today, we're talking about the impact of taxes, the Trump plan, the congressional Big Six, as we call it, including Ryan and Mitch McConnell and Treasury Secretary Mnuchin and others who are working together with the administration to try to get a plan together that will go through. But all of this really only makes sense when interpreted in the light of our own personal economic bubble that we live in. And what we want to help you achieve is financial independence, to be as much as possible off the tax radar, off the risk radar to the degree we can do that, and able to sustain income that will allow you to live your lifestyle for as long as you live without fear or worry from taxes and from risk and the markets and so forth. That's what we do. We do it every single day. And I'm proud to say that we have a group of wonderful clients that we serve throughout the Front Range, and we'd love to talk to you. Give us a call. Don't delay, because there's so much that needs to be done between now and the end of the year in our own personal planning to make sure we're prepared, whether these tax changes go through or not. Give us a call, 720-372-0400. Again, that's 720-372-0400. One of the things that's unique at our offices at Lord and Richards is that we employ a team approach. We have multiple advisors with multiple specialties. We have a certified tax specialist to help guide you in making key choices that will help you avoid mistakes in your own tax planning, long-term and now. We have CPA on staff. We have folks that are dedicated to help you put down in writing the wisdom and experience of many, many years that this group represents of helping people plan successfully for retirement, both now, today, whether you're working or retired, and into the future and beyond when we passed away and we want to avoid our money draining down to the government. So let's talk about your situation. Again, one more time, here's the phone, 720-372-0400. So here's what I want you to do. I want you to ignore all the talk show rhetoric until we actually see legal language, statutory language come out that we can then bank on and plan on, or at least start to make more plans until it actually passes. Here are some core ideas that are coming from the Republican side, which is driving this. On a personal note, the Republicans and the administration want to reduce the number of tax brackets. If you've been reading much about this, you know that it's kind of settled into 3 tax brackets as opposed to the current 7. The current ones range from 10% up to 39.6. The new 3 brackets that Trump and the Big Six are working together on is 12%, 25%, and 35%. And what we understand is that a part of our money gets taxed at 12%. If we're blessed to earn more beyond that, that next chunk over and above gets taxed at 25. And if we earn beyond that, the next chunk, the final chunk, gets earned at 35. So your own personal tax rate is not just whatever the highest one is that you fit in. It's a combination of the 3. And just how much above and beyond 25% tax rate you earn will have the biggest impact on your own personal tax rate. So that would be refreshing, I think, to simplify that. But the key is, can they do it without bankrupting the government? As Christians, we follow biblical principles. And at Lord and Richards, we follow those principles every day, which includes managing money as a steward. The Bible says wealth gotten hastily will be diminished, but he who gathers little by little will see it increase. And I think a corollary of that is, if we're wise in how we plan and prepare and take advantage of deductions in the tax realm, we'll have more money to show for it at the end, not just for our personal use, but also for the kingdom of heaven. And so we want to be wise stewards. We want to be educated about what's coming, what we might see. And so what are the implications? Well, as we break into 3 brackets, it may affect how you take income and from what sources. This is so pivotal. As we work with retirees every single day, getting the sources coming out in the right order to minimize your personal tax rate is going to be important, whether reform is passed or not. Yes, we're going to see some lower marginal rates, but here's the flip side, and here's what I want you to be aware of. You're going to have some losses of some itemized deductions, and that's going to hurt a little bit. If you're just jumping in, I'm Colin Richards. I am Denver's Biblical Investment Advisor. At Lord & Richards, we operate off of 5 key biblical principles, which you can find on our website at lordandrichards.com. There you can learn about us and our principles, but you can also learn about how we help our clients achieve financial independence. And making sure we don't overpay taxes and waste money with the government is one of our key ideas. We would love to talk to you, because we need to sit down and visit about your specific situation. Talking about taxes in a bubble isn't going to help you, but applying what's going on in the world today, both in taxes and in the markets and in all the other areas that affect your retirement and your ability to be financially independent, that's got to be personalized. That's got to be just for you. We follow a process we call a financial independence roadmap, and we'd love to prepare one for you. We do them every single day. And what we do is we answer the major questions every retiree should have. Can I have income that will never outlive me? Okay, or that I won't outlive? Do we have enough to retire, both individually and as a couple? Do you have a written plan in place to do that? And then we also talk about market risk and how to implement a strategy that is designed to help you avoid those catastrophic and sudden losses in the value of your portfolio when the market declines. We can help you do that. And then making sure that you're not bankrupted by a long-term care or nursing home or in-home care crisis. And that is the number one cause of bankruptcy in retirement because it affects so many of us. 70% of us as households are going to be affected by long-term care. But then what we're talking about today is taxation. And how are we going to avoid leaving all of our money to the government? That's one of our key principles is don't waste your money. First principle is don't lose your money to market losses. Second principle is don't run out of money. Be sure you can retire. And third principle is don't waste your money on things that it doesn't need to go to. So pick up the phone and give us a call, 720-372-0400. Again, that's 720-372-0400. And we're talking right now about the core ideas coming from the Republican side. We talked about a reduced number of brackets, just 3. Lower rates. Okay, we're dropping now from rates that go as high as 39.6% to rates that top out at 35% and lower. But here's the negative side. Here's the dark side. Those of you who are accountants out there know for every debit, we got to have a credit and vice versa. If we're going to reduce everybody's rates, we also are going to see reductions in some of the things we've come to enjoy, such as our itemized deductions. Now, there does seem to be a push to keep your mortgage interest deduction and to keep charitable deductions. This is one I've been watching very closely because if you know us at Lord & Richards, we're really charitably minded. As a matter of fact, we began the Foundation for Global Education, and Lord & Richards dedicates a portion of its profits to global mission activity, Christian missionary activity. And so that would be a tough one, right, if folks lost those deductions. Now, I would hope if the government took that away, we wouldn't stop giving because we don't give just for a deduction, right? The principle of being a great steward also is recognizing that this money has been entrusted to us by God, and we should give whether or not the government acknowledges it. We're blessed to be in a country that does. There are many countries that do not acknowledge it. But here's what you got to do. Between now and the end of the year, you need to be getting with your accountant, getting with your CPA as soon as possible to talk about the impact potentially of these itemized deductions. Now, wait until we get some real language out so you can begin to plan and prepare. But it's going to affect when you take your deductions. For most of us, this means probably we're going to accelerate as many itemized deductions into the current year as we possibly can. We want to do that. We want to work hard to accelerate expenses into this year. If you know you're going to be buying something for yourself that is deductible or doing something that's deductible, whether personally or for a business that you own, many of us are going to want to look at doing that in 2017 on the possibility that some of those deductions will be lost in 2018. Now, the tax code hasn't told us much about capital gains, but they're probably going to be about half the other rates. So we're not sure, but you need to do some planning about capital gains. This is something we can assist with. As you sit down, we can help you map out when you should be selling certain securities to maximize your deduction and to pay the minimal rate. So those are some of the key takeaways. And in addition, though, on a positive note, another one on the credit side is that we're likely to see an increase of the standard deduction for married folks from $12,000 today to $24,000. So that should hit the middle class squarely in the chest. That'll be a good one. But again, you may be seeing that in a trade-off on your itemized deductions if you're used to deducting a lot. Maybe you have a small business and you have a home business. We're going to wait and see what is left standing when all this shakes out. This is why it's so important to sit down with a comprehensive team of investment advisors and financial planners to make sure you have a roadmap, a financial independence roadmap, we call it, in place to get you to and through retirement successfully, to be truly financially independent, not ever worried about going back to work or worried about the impact of volatile markets on your income stream, but to have safe, predictable income the rest of your life. to have this tax question resolved so you don't waste money that could be going to the people you love, the causes that you love, and to your own enjoyment of life here and now. And then to make sure that you're not blindsided by an illness in the family that can bankrupt, unfortunately, too many retirees. If you'd like to talk about that in your own personal context, what we're doing for income, what we're doing to minimize taxes now and in the future, and so on, we would love to talk to you. We're available right now. Our team of advisors is a loving, caring, gifted group of people who does nothing better than to help take you by the hand and walk you through this process. Give us a call at 720-372-0400. Again, that's 720-372-0400. Now, on the business side, we will probably see corporate rates go down, and we'll see that for both C Corps and S Corps and LLCs. C Corps will have a lower rate, probably in the 20% range, and then S Corps and LLCs for our business owner, 25%. But at Lord & Richards, we help business owners every day, and you might be thinking, oh, I'm going to jump ship. I'm going to change my S Corp or LLC to a C Corp so I can save money on taxes. Oh, wait a minute. Don't forget, folks, that C corporations, the earnings get taxed, and then they get taxed again when they come out to the shareholder. That could mean 36 to 40% taxation through that C Corp environment. So you may want to continue to look at, as a small business owner, entrepreneur, sticking with those S Corps, those LLCs, because you just have a one-time pass-through tax to the shareholder of 25%. So we're going to see a reduction in complexity, but it may hit us pretty hard in some cases, even as the government tries to make taxation a better issue for businesses. It might hit us personally as business owners a little harder. And then we're going to see changes in the gift and estate tax environment. Right now, the goal is to eliminate quote unquote death taxes. And yet there still are a lot of questions that remain. Will we continue if we own an investment for years, or our parents or grandparents own that investment for years and it's had a lot of growth? That now is a capital gain. Will we be allowed to have a step up in basis? In other words, to eliminate that capital gain when we inherit that? Or are we going to start paying taxes on that as we haven't done in years? We're probably going to see the gift tax still remain in place. So you're going to have to do a lot of planning around that. And we're probably going to possibly see the elimination of the generation skipping transfer tax. Now, some of this is good news. It's mixed bag, but for most of us, we got to think this is a 10-year window. Remember what I said earlier? It's a 10-year window. So if you're planning for the long term, you really should not change all of your long-term plans for a 10-year window. Short-term planning, that's probably going to change. Maximizing your current deductions, putting expenses into 2017 to take advantage of perhaps better rates. That's all very important. And that's something you should do with your planner. And you also need to be getting in touch with your CPA as you prepare for possible changes. So the current document isn't telling us much about capital gains taxes, but it'll probably be somewhere in the 1/2 or 50% of the other rates. So if you're at 12%, it's probably going to be 6 or 7 and so on. So what do we need to do in the meantime? Well, we need to pick up the phone. We need to get in touch. Lord & Richards employs a team approach. We work with CPAs, we work with attorneys to help our clients develop an absolutely comprehensive plan. We try to close every window in the house, upstairs and downstairs, against the impending storms that could affect your retirement, such as market losses. We want to have a risk management plan in place so that you're never devastated by that again. And such as the fear of running out of income. This is the greatest fear I hear from every person I sit down. We can help you reduce or eliminate that fear with strategies that will help you never run out of money as long as you live, you and your spouse if you're married. Feeling like a pension as opposed to feeling like you're on the tidal wave, riding this wave up and down of what the markets give and what the markets take. And then finally making sure that we're not devastated by a healthcare crisis, or upon death, making sure that our assets aren't wiped out by the government. Pick up the phone, folks, today. Let's not delay. Let's not take something so important and put it on the back burner. It's time. 720-372-0400. Lord and Richards, Denver's Biblical Investment Advisors, 720-372-0400.